Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, and comment down below. Alrighty, today I wanted to touch base on how, in my opinion, the Federal Reserve is trying to bail out Credit Suisse and how this is done through basically the back door. So, news came out that the Federal Reserve just lent out through some swaps, from my understanding, at least $3 billion to the Swiss National Bank. And later on, that $3 billion turned into close to a little over $7 billion. And if you look at Credit Suisse, there's reports that they may have close to an $8 billion shortfall in dollars for basically capital requirements, from my understanding. And if you're just looking at this, you have to think out loud. Why, or the Federal Reserve is doing this? Why? Because they're probably trying to bail it out to prevent systemic risk. And now, what does this mean moving forward? It means that you're seeing a lot of volatility right now, specifically in the bond market. I think there's a bond volatility index, the MOVE, and this is reaching at really high levels. And I was taught that if volatility levels are extremely higher compared to the mean, they mean revert. For instance, the VIX, the VXST, etc. I think there's an oil ETF as well. I think it's called the OVX. I think that tracks the USO, if I'm correct. So whenever these spike up like crazy, volatility mean reverts and you see a move to the other direction. And now interest rates have been going higher, bond prices have been selling off. So now is the move where bond prices are going to rally because the Fed is going to start buying it up and the Fed's going to pivot. We're at a point where the market doesn't like higher interest rates. Now, the Fed's in the corner. Okay, inflation is somewhat high, and you raise interest rates, that's bad for the economy. So, or that's how it's priced out. So, if then they said, no, we got to buy up bonds to lower interest rates because the economy can't handle it, what's going to happen? You could see some nasty inflation come about, right? I'm not telling you what to do, but it is what it is. So when they lose control of the system, it may boost up asset prices, but ultimately this is going to be unsustainable. So looking at what the Fed did with probably bailing out Credit Suisse, in my opinion, what does that mean for everything else? Probably means that Fed pivot's coming, right? You just don't know when. Anyways, guys, let me know what you think, and I'll talk to you later, guys. Thank you. Bye.